Okay, records video on Sunday, the 23rd of April, 2023, just gone 2:41 p.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. I'm going to start with the E-mini as usual in this video. And let's just go back to last weekend's video where I was talking about a break above 4,200, and I was hoping for that on the Monday or the Tuesday. But we did not get it, and it ended up being a very quiet, frustrating, low-range, low-volume week where we just went backwards and forwards on a whole bunch of markets, and we never got kind of a directional break. So one of the things we do know is that kind of lack of volatility, lack of volume eventually leads to a greater volume and greater volatility. So if we don't get a break this week, then we're going to get a break next week. At some point, we're going to get out of this kind of range that we're trading in. And my bias is still to the upside, but we're taking our time a little bit. So the first chart to show you is a better volume here on the weekly chart. You can see we only did about 7 million contracts traded on the E-mini during the day session, which isn't very much. And we ended up with a blue bar on the price bars here. That shows that's a high churn bar on better volume, which means that we have relatively high volume and relatively low range. And that's kind of 2 weeks in a row where we've got this kind of compressed range and you know, something's happening. We've got blue professional bars. We're waiting for a jump. I don't think this is going to break to the downside, but we'll have to kind of wait and see. Because we put in some pretty significant bottoms over the last several months, we had red, white and blue patterns kind of down here where the market sells off, is caught by the professionals, step in where the range is compressed and we get some blue bars, and then we start to take off to the upside. And same thing the last couple of weeks. We had red, white and blue exhaustion sell, blue professional bars kind of come in here, all compressed high churn here, and we have a red bar kind of taking off to the upside. So are the professionals kind of getting ready for a jump above 4,200? A couple of reasons why I think that's the case. First of all, momentum. If we look at the better rotation indicator, this is showing us all of the major asset classes on one chart using the ETFs, so we can compare everything in one chart, and it puts better rotation here on these, calculates the relative strength of each of those asset classes here. You can see here this last kind of year and a half, 2 year period, at the top of the chart here was crude oil. That was the strongest of the lot. And then about 4 months ago, you can see that gold started to really take off. When we start to kind of cross above the 50 level, that's when we start to see a particular asset really kind of gain momentum and get to the top of this kind of range. So gold's been strong for the last 4 or 6 months here. And we've got equities. Equities were kind of doing nothing for a while, then they broke above the 50 level, came up to the top of the range and then kind of came down a bit. Now we're kind of strengthening, so equities sitting at 79 here. I mean, everything is super compressed at the moment. You can see everything's really tight compared to kind of previous months. Everything was kind of in a wider range, so we're waiting for something here, and equities has definitely kind of moved to the the front of this bunch at least. And we've got things like junk bonds are up there as well. We've got emerging market equities that are pretty strong and so on. So these things tend to be kind of risk on type markets, and they're kind of taking off. So we've got a momentum play happening there. And then when we go down the better indicators, these are on the two panels side by side. When we have all the indicators to do with price on the right hand side, all the indicators to do with volume on the left hand side, when price and volume are both moving in the same direction, the background is printed in red for an uptrend and grey for a downtrend. And we're in an uptrend at the moment here, so the background is in red. Possibly we've got some weakness to kind of play out here on the daily chart because we've got resistance down to support we've got to play out. We've also got resistance on the intermediate time frame that potentially has got to come in. So we could see a little bit of weakness before getting ready for a jump above the 4,200 level there. Amateur bars kind of leading the way a little bit over the last couple of weeks, so shows a little bit of weakness here. But the last time the professionals were in, they were kind of buying this dip down here at 3,700. So we haven't seen them getting out. No blue professional bars at these highs to show professional profit taking there. So down another time frame, the 135-minute chart, exactly 3 135-minute bars in a day session of the E-mini. And you can see here that 4,200 level, super important there. A whole bunch of blue professional bars came in at the highs there, but then they did come in at the lows here. And yep, a little bit of weakness led by the amateurs, so a little bit of weakness after there, a little bit of weakness there. but we're itching to get through 4200 here. 45-minute chart, still in an uptrend. The background printed in red, so that's showing price and volume both moving in an uptrend. No blue professional bars taking profits up here, no exhaustion buy. The last exhaustion buy that we had was getting that move going. So my bias is still to the upside above 4200. So 15-minute chart, the first time we see a little bit of weakness here with the background in grey. So we're kind of selling off a little bit, but the last time the professionals were in during this week's activity. So solid yellow lines show the beginning and the ends of the weeks. So during this week we had pretty junky activity up and down, pretty tight range, 41.40 to 41.90 and a little bit. So only about 50-60 points of range there during the whole week, which is nothing. And then blue professional bars kind of came in Thursday, Friday at those lows. So they're holding that, hopefully, break above 41.71 would show us that we're continuing into an uptrend there. And we've got cyclical support potentially due on better sine wave. Then lastly, the tip bar charts. Again, solid yellow bars for lines for the beginning and the ends of the week. So we had a little bit of weakness, and then we raced away, tried to test 4100, and Rambo patterns up at the highs. Classic. So the amateurs getting wrong-footed there, driving the market up, get wrong-footed, and we kind of go the other way. But over the last couple of days, down here into the lows, exhaustion sell, bullish divergence comes in, blue professional bars kind of come in here. They kind of hold at that level, kind of break back up through that sequence there. And we've got blue professional bars kind of coming at the end of Friday, and the background has turned red here. So for me, that's all just showing that we're just in congestion, waiting for that break back above testing 4200. And on these lowest time frame charts, we've got a setup happening at the moment that potentially is going long. And I'll show you that on the tip bar charts where we have the signals. We've got 15 futures markets we look at, all of the Forex charts over here. We've got the E-mini, the 10-year notes. We've got gold, silver, and Bitcoin. Then we look at crude, natural gas, and copper. And lastly, the ags with corn, soybeans, and wheat. So let's start with the euro. So this is the best of the better indicators all on one chart, and we can start to see signals when the three non-correlated indicators start to signal simultaneously. The beginnings and the ends of weeks are marked with these solid yellow lines, and this is this last week's activity. It was pretty interesting, kind of Thursday of last week into Monday, Tuesday of this week, but after that we just got stuck in this really tight range on the euro. But we're starting to see signals kind of breaking up. A whole bunch of blue professional bars kind of coming in, pretty anxious to buy it at that point. We test to the lows of that blue professional bar kind of sequence, and we've come to the highs of that. So I'm long euro at the moment, hoping for a breakout above that. And if I'm right, that means kind of risk on type markets, and we'll get a break simultaneously on the E-mini, hopefully. So we've got a signal happening in the euro at the moment. Now, the British pound, we also have a signal long kind of happening earlier in the week. But we don't have a whole bunch of exhaustion patterns to kind of go along with this. We had an exhaustion sell, bullish divergence here, getting the move going, and that flush pattern is reacting to that exhaustion sell. So we haven't had an exhaustion sell kind of down here. A little bit of a breakout trade there that generated the signal. We test back into the lows of that, and we bounced off that. So maybe the British pound is going to follow along with strength in the euro, but it's not as good a signal as the euro signal. And then on the Aussie dollar, you can see the previous week we had a whole bunch of blue professional bars testing into that 68 level there, and we sold down from there, and we've come into, again, really kind of junky patterns down here. No exhaustion sell at this point. The exhaustion sell was getting the move going here. Blue professional bars kind of step in, U-turn, exhaustion buy. I mean, we have to get through this 67.5 level here to give us a break into an uptrend there. But again, not a signal this week. The last one we had a couple of weeks ago, kind of short. That was good. So that's the Aussie. Japanese yen didn't generate a signal this week. We had one the prior week, which kind of ran into trouble when we got blue professional bars taking profits at the highs there, and we've kind of gone down to test the lows again, 75 down here. Yep, we got an exhaustion sell signal, some blue professional bars. It kind of raced away here with an exhaustion buy, but it's not convincing on the Japanese yen. So in terms of the Forex charts, the only one that's looking good to me is the euro. E-mini though did signal at the end of last week with that exhaustion cell, bullish divergence comes in, blue professional bars at the lows here, 41.40, and we test the lows again. We kind of come out of that and generate our signal here. So we need kind of continuation, breaking above out of this channel, 41.60 would be a good kind of break, and that possibly could set us off to go look at these highs at 4200 there. So that's the E-mini 10-year notes. What's going on there? Bottomed here. That was a nice pattern here. We got some signals kind of earlier on in the week, but then we have another exhaustion sell signal. Whole bunch of blue professional bars kind of step in here. We start to rally. A little bit of weakness here. We need to get back above this trailing stop on Better Pro-Am in order to signal that we're back into an uptrend there. So that's interesting that we got kind of long Treasury notes at the moment. So long bonds means interest rates coming down. Could mean that we've got kind of looser monetary conditions around. This could lead to a rally in kind of risk-on type assets. Gold and silver. Gold and silver. Now, a whole bunch of signals this week. We keep on testing down and down. This wouldn't have been a good signal because that's based on exhaustion sell that happened back here. So that's not kind of right. But here we have put in exhaustion sell and bullish divergence. We've come in to test. So back above 2010, break us back into an uptrend on gold would be kind of good. Silver. Same thing, signal here, a whole bunch of blue professional bars came in on only a little bit of weakness here from above 26 down to 24.70. So that's kind of come in here, but we need to prove that, get above this kind of breakout level to be sure that silver is in an uptrend. And Bitcoin got slammed this week, absolutely slammed. We break through blue professional bars, whole bunch of sign of weakness, and those are blue professional bars kind of selling down with exhaustion sell kind of going on. They're continuing it here, and even at the lows down here at 27,000, we've not seen blue professional bars kind of coming at those lows. So Bitcoin not looking good at the moment, but potentially crude. So we had signals in crude this week, and I like this one with blue professional bars kind of coming in here just under 77, started to hold. So we get above 78 and a bit, 79, and that would show that crude is starting to rally again. So we had this big pattern where we had strength in crude, and we had a signal several weeks ago that then led to that huge kind of gap up. So we go the signal kind of setting this trend off, and then we had that big kind of gap open a couple of weekends ago. We gapped up into the 80s, and then they had a little bit of profit taking up those highs at 83. So people anxious to kind of play that kind of almost closing the gap kind of trade, kind of buying in here. We've got a signal on crude, so that's good. Natural gas also looking good. So we had a signal last week, bang at these lows, $2 and a bit, and we kind of jumped up, got to 255 in the course of a couple of days trade, and we've kind of come off. But then here's the blue professional bars kind of settling in at 235, coming in, bang, bang, bang. We've had a signal at the close on Friday. It's natural gas looking good. Copper, whole bunch of blue professional bars kind of coming in here, but we've got an exhaustion sell signal with this weakness after Friday's signal last week. So we haven't seen a similar pattern to match that exhaustion sell kind of down here on copper. So I wouldn't be kind of jumping into copper yet until we see that. And then the ags. So last week I was pretty keen on the ags because they were in an uptrend, and jumped back into corn. So I was long corn last week, and then at the beginning of this week got into corn as well, and then took profits up here. Didn't manage to get the high, but blue professional bars and exhaustion buy came in on the lower time frame chart, and I was out at that point kind of up here. And then we had a really big signal kind of short. So corn's been super weak from there, no signs of an end in sight with no exhaustion sell kind of down there. And then soybeans also looking very weak. So we had, it was finding a lot of difficulty getting up through 1520 up here. We had a whole bunch of signals over the last 2 weeks, and then finally this one, when all those blue professional bars kind of come in and sell it down, and then sell it down even more. And that exhaustion sell is kind of getting the move going to the downside. So I think soybeans is going to keep on going down until we see oversold kind of level. So we'll see where that kind of goes. And wheat, I was bullish, very bullish at the end of last week, and you can see how little trade there was in wheat this week because of the compressed range of the bars. It did set off to the upside, but then blue professional bars kind of came in at the highs. and it sold down for the latter part of this week. So it was a nice trade in the beginning of the week, but then kind of all fell apart, kind of reversed and went the other way the latter part of the week. So I don't know, 4200 is obviously the key level. Let's see if this signal on the E-mini on 13,500 2-bar chart generates the upside break that I'm kind of looking at on equities. Long euro at the moment, but this level at 111 back here is kind of troubling with all those blue professional bars. So is this just going to be a temporary little pop to kind of test into that, and then it kind of reverses and goes the other way? We'll have to wait and see. So there we go. That's what I'm looking at on my charts this weekend, and looking forward to this week's trade.